All right. Well, we are going to go ahead and get going. So, welcome. My name is Karen Houghton. I'm the CEO of Infinite Giving, and I'm so glad you're all here for what should be a really powerful conversation on generosity, especially during this final stretch of giving season. This is one of the most important moments of the year for many of us as nonprofit leaders. Donors are making decisions quickly. They're thinking about impact and taxes and legacy and what they really want their giving to say about who they are. And these conversations you're having right now, if you do it well, can truly help meaningfully shape your year end. So we have a huge opportunity to help these donors give more efficiently and more meaningfully. And that requires better donor conversations, which is why today I'm thrilled to be joined by someone who has changed the way our entire sector understands generosity. Dr. Russell James, JD, PhD, CFP. He's a professor at Texas Tech and the nation's leading researcher on charitable giving and all of the behavioral science behind it. So, in addition to all those important letters behind his name and his impressive pedigree, he also happens to be a very kind and generous human. And I'm so glad he's joining us. Russell, is there anything you'd like to add a bit more with us on your background?
Well, just glad to be here. Really excited for this opportunity, also for your new book and the impact of that. And so my background was I started out right out of law school as in plan giving. I also had an estate planning practice and did that for a number of years. Decided the whole college professor thing is what I wanted to do. Went back and got my PhD in consumer economics. My dissertation was on charitable giving. And then eventually the college asked me to serve as president. I did that for about 5.5 years, mostly a major gifts fundraising focused role. And the school was very successful during that time, more than tripled our enrollment, built a lot of new debt-free buildings and things like that. And when that job ended, my career goal was to not be anyone's boss. I just wanted to do teaching and research in the university. And that's what I've done ever since. I was at the University of Georgia for a number of years, and now I've been here at Texas Tech University for about 15 years, where I teach charitable financial planning in the School of Financial Planning here at Texas Tech.
Well, we're so glad that you're here, and you did mention the book. So I'm proud to let you all know that Professor James also wrote the foreword for my new book. So we do have it. It's called Funding Your Mission: The Modern Guide to Nonprofit Finance. And it just went live on Amazon and Barnes and Nobles today. So we'll pop that link into the chat for you to check out. And I share that because we thought it would be nice to give one away today at the end of the webinar. So stay tuned. And at the end, we will pick an audience member and send you a free book from both Russell and myself. We are passionate about providing resources that help nonprofit leaders like you. So we're going to dive in because we've got lots to talk about today. And as we go, please just remember that we do have Q&A. And so that's an important part of this conversation. So remember that you can drop those questions in the chat, and we would love to get to those. And we're even saving some time at the end to address those as well. All right, Russell, let's start with the psychology of wealth conversations because you've studied donor behavior for years and years. And a big question that we all want to know is why is it that traditional fundraising asks often fall flat, especially with these high capacity donors or what we like to call generous givers?
So, Karen, I think it's really important to understand that there are kind of two kinds of fundraising. There is what you might call small gift fundraising and small gift fundraising messages that work really well for small gifts. But there's also large gift fundraising and large gift fundraising messages. And those are actually oftentimes very different things. And it's not that those who are doing the small gift fundraising are wrong, they're just doing a different thing. So for small gifts, that's a story of aren't we great? We're such a wonderful organization. Let me tell you about how great we are. And that's why you should make a gift. Now, large gift story is a bit different. It's actually not a story about the organization. It's the donor's story. What would the donor like to accomplish? And sometimes, how can we as an organization be their effective instrument of impact to help them accomplish the change that they want to see in the world? So you might think of it this way. Small gifts are made to an organization. Big gifts are made through an organization, meaning that for big gifts, the organization is really just the donor's instrument of impact to help the donor accomplish their philanthropic goals. There's oftentimes a conflict in this because, actually charity administrators, they love the small gift message and the small gift story because it's all about how great they are, how great their organization is, and they don't have to work together with donors. They don't have to share power. They don't have to kind of work together on things that are mutually accomplish those goals. We just talk about how great we are. Again, that's fine for a small gift message. Grab the attention, present an empathetic image. That's a great small gift message. That's not what works in the major gifts or larger gifts. Another difference is this. Small gift decisions are disposable income decisions, right? They're pocket change decisions. They're these quick kind of reflexive choices, much like, other cash decisions we make. The difference is major gifts decisions are not. They're actually wealth sharing decisions. And because they're wealth sharing decisions, they're actually asset sharing decisions because that's how wealth is held. Wealth is not held in cash. It is held in what we call non-cash assets, like it might be securities or real estate or various other forms. And so when we start having those asset conversations, we're essentially having wealth sharing conversations. And those are the kinds of conversations that lead to big gifts. So big gifts tend to come with instructions. They tend to be gifts of assets. They tend to accomplish the donor's individual goals. And that's what makes them a bit different.
And they are very different, and I love that call out because we talk about that a lot, even at Infinite Giving, where the average online cash gift is roughly $128. The average stock gift is $8,000, I believe, is a national average. They tend to be even higher through our platform. So it's always that question of how do we live in that kind of tension between we have to talk to all the people. So we have these conversations for, those generous givers, and then we also have to get those $128 gifts. I think my worry is always that people focus so much, cash is king, the small credit card donations, this is what we want to do, that they do all of these giving asks and they on all those links they don't even talk about stocks or they don't talk about these opportunities for these generous givers. How do you kind of handle messaging when you're talking to both sides of those types of generous givers?
Yeah, so one of the things to start with, and this isn't messaging to begin with to the donors, but almost messaging to the charity leadership, is just to look at the reality of the statistics that the money doesn't actually come from the bulk of donors. The money tends to come from a relatively small group of donors that make major gifts. I mean, this is not an 80-20 world when we look at it. It's closer to an 82 world, where for the typical organizations, especially those that are successful in major gifts, they're getting 80% of their dollars from 2% of their donors. So that's all to say, don't forget about those opening those conversations about wealth sharing, those asset conversations. So, how do we do this if we're doing broad marketing and broad communication? A real simple way to do it is to just let people know that this is possible. How do we do that? Well, you already know how to share donor stories. Just start sharing asset donor stories. Why? Well, because you get a double tax benefit if you give appreciated assets rather than giving cash. So that's a good conversation starter. There's lots of other ways that we can give assets. We can give retirement assets in ways that are tax advantaged, whether through a QCD or naming a charity as a beneficiary of the account. But the idea is we want to normalize these kinds of gifts. One of the things that we've found that help open up that conversation is to just talk about how to give smarter, other ways to give, and pointing out that many people like to support this organization in a variety of ways. Which of the following might you consider or might like some more information about? And that might be gifts of stock, gifts of real estate, gifts from a retirement account, gifts in a will in honor of a loved one, whatever those gifts of cryptocurrency. The idea is that if we get somebody to check that box, oh, I want more information about that. What are they telling us? They're telling us, I have this asset and I'm thinking about doing something charitable with it. Well, we want to get on the phone. We want to have more detailed conversations with that person right away. So it doesn't have to be super complicated. If you're sharing stories, just learn how to share asset donor stories, because now that's wealth sharing, not just disposable income sharing. Just normalize it, make it an option, make it available, make it just as convenient as the donate now button. We don't need to interfere with that transaction, but hey, at the end of the transaction, why not mention to them? Many people like to support this organization in a variety of ways. Which of the following might you like some more information about, right? Just to
Mhm.
try to open up that wealth sharing conversation.
Yes. And when so something I've heard you say many times is that giving is tied to identity and story, not just logic. Can you explain what actually happens internally when a donor enters into these giving conversations?
Yeah, so one of the things to realize about philanthropy is that it is not the same as a straight accounting or business
Right.
decision. You can think of it this way. If you think of philanthropy or that decision as a car, well, the social emotional kind of visualization, story components, that's the engine of the car. And the logic and math and accounting, that's the brake. Now, we have to do these things in the right sequence, because if the engine isn't started, if there's no story concept or there's nothing that I, as a donor, am visualizing and emotionally responding to that I'm trying to accomplish, you can give me all the data you want. And the best you can hope to accomplish is to get me to lift my foot off the brake from a car that the engine hasn't even started. You're still not going to go anywhere. You've lifted your foot off the brake, but you don't have that motivation to act. So we've got to get the sequencing right. And the sequencing is to create that internal visualization of, this is the impact of my gift, not the impact of this organization, the impact of my gift. I can visualize that impact, and that impact is personally meaningful for me. That's a goal now that I want to accomplish. Now, once I want to accomplish it, and I've got that social emotion tied to it, it's fine to make all that technical stuff available. Some people will need to dive in a little bit deeper into that technical stuff to take their foot off of the brake so that the car can move forward. Other
Mhm.
people, a little bit more trusting, they won't want as much, they won't want to dive into as much of that information, but we can make it available in either case. But the notion is that we've got to get this sequencing correct, because if we start with the numbers, if we start with the math, if we start with the logic, it's not going to work. We're ultimately just going to get them to lift their foot off of the brake for a car that doesn't even have the engine running, and it just doesn't move forward. So that's kind of the analogy to understand how these things are different. And we actually do see this in the neuroimaging, that when we see the parts of the brain that are used for charitable decisions, and that charitable giving is enjoyable, but it's also different. It uses
Mhm.
social emotional parts of the brain, things that are also used, for example, in family bonding, or that respond to hormones like oxytocin, which is a family bonding hormone. And in fact, even when we look at legacy giving decisions, it's all about the donor's life story. Autobiographical visualization is what's taking place in the brain. So all of these are pointing to that this charitable decision, especially the big ones, these are all about the donor's life story. It's about social emotion. That's what makes them different from normal, just straight accounting or business decisions.
I love how you're connecting that biologically as well. When you're just looking at here's how it all comes together. So what are these fundraisers? How do they help to trigger generosity at that transformational level in these conversations? What can they do to make someone feel ready to give in that big way? With these stories and trying to connect, is there a certain script? What do you advise for them to enter into these conversations?
Yeah, so, great question. And in fact, I've got a whole book called The Socratic Fundraiser that has 200 questions you can use to walk through this process. Pick your favorite. I do share all my stuff for free. If you go to encouragegenerosity.com, all of my books are there for free. The digital version, anyway. If you want to kill some trees, you can go on Amazon for that. But those are shared there. But so the idea of what we're trying to do is to help the donor tell their story. And in order to help them tell the story, we just have to remember three words. And those three words are identity, challenge, and victory. In other words, when we're going to make the ask, that's the challenge. That ask needs to be motivated by their identity. Their identity needs to connect to the challenge. Now, that challenge needs to promise a victory. And that victory needs to be personally meaningful because it connects back to their identity. So, identity, challenge, and victory. If you make an ask, it doesn't connect to the donor's identity, it's not going to be particularly compelling. If you make an ask and it doesn't promise a personally meaningful victory that results from their gift, then it's not going to be that compelling. So, how do we get to that place? Well, a couple of different things we can do. One, we can open up the conversations about their identity connections to the cause or the organization. And when I say identity connections, I'm talking specifically about their close people, their personal values, and their life story. So we can ask them questions that help them to make these connections. So, for example, even just asking motivations about tell me about why you're so generous and where that comes from. Tell me about how you first got connected with this cause. Do you have any family members who also care about this cause? So, learning some of those things, helping the donor to share their story as to what connects them can be really powerful. And then ultimately, to be really compelling, we need to help them design a personally meaningful victory. How do we do that? One of the ways we can do that is to ask some blue sky questions. Like, look, if money were no object, Karen, what kind of an impact would you like to have on this cause? Or what kind of a legacy would you like to leave? Or how would you like to make this world a different place? Now, these are big, broad, blue sky kind of concepts for what sort of impact that they want to make. That's what we want them to think about in terms of those big goals that are meaningful to them. Because here's the thing, we are experts on our organization. We know things it can do, things it can't do. Once we understand their identity connections, people, values, and life story, and what they would really like to accomplish, big picture, what's most meaningful to them, we're going to start to see connections. Oh, here's a project. They need to get more involved with that. They need to have some experiences to learn about those connections. And ultimately, over time, we can help them to tell that story that leads to that major life investment. That is an appropriate, substantial part of their life story because of these connections. And that's what we're there to do, is to help them make these connections and create or identify philanthropic opportunities for them at our organization, or honestly, even if occasionally not at our organization, to come alongside as an advisor and say, here, I'm here to help you accomplish these things and actually help you accomplish them in a smarter way. Here's some tax advantage strategies by making it as gifts of assets. So these are the processes that we can work with to lead to those major life investment gifts.
That's great. And I know we'll have time for Q&A at the end, but I also just saw a question that I'd love to just go ahead and pitch to you. It said, last year, a new donor gave us $65,000 in cash. Their organization is roughly a $1.5 million budget. They gave them this gift to balance the budget. How do you classify a giver like that?
Well, so number one, they have capacity. And so we want to spend as much time as we can with that donor. Number two, if they are making a cash gift of that amount, the way that we gradually move into the much larger amount, because look, frankly, if they're giving you cash to just balance the budget,
Mhm.
that's not a major life investment gift for that donor. And so it lets you know, let's spend more time with this donor so that we can start shifting the conversation into things that are personally meaningful for them, that could warrant that major life investment gift. And also, let's start shifting it from this disposable income gift to that more asset based major life investment gift. So, how do we do that? Examples of that is number one, we can just go to the donor and say, by the way, thank you for making that gift. That has made such a huge impact. Really appreciate that. A lot of donors who give at your level like to give appreciated asset gifts rather than cash because they get a double tax benefit. Is that something you've ever thought about? Now, a couple of things could come from that. Number one, you might shift that conversation to asset giving. Or number two, you might find out it actually is asset giving if it came from a donor advised fund, right? They may have already shifted that asset to a donor advised fund, and maybe you just saw the cash out the other end, which is fine as well. But if that's not the case, if they're just writing a check that's out of their checking account, okay, let's start
Yeah.
talking about these bigger, broader philanthropic goals, and let's start shifting that from disposable income sharing to this asset sharing, which is how we move to wealth sharing.
One of my favorite data points that you have provided in your insurance, in all of your research that we use a lot at Infinite Giving is that nonprofits who pursue stock and securities gifts over those who are just asking for cash tend to raise 55% more over a 5-year period, right? And so a lot of this is around like, okay, it's the chicken and egg problem that we talk about all the time at Infinite Giving, where they're like, oh, they just want to write me a check. And I'm like, no, they don't. They think that you don't have the ability or it's going to be too complicated to actually give it as securities. And so talking about, even upselling into, I'd love to hear the psychology because often what we hear is it's like, oh, well, if I know I can save, up to 37% in capital gains taxes and then get that double dip of being able to claim the full value of the gift, can I give 20% more? Right? They're still coming out ahead of the game, giving insecurities on the tax side. How do you tell that story and how do we convince these nonprofit leaders who are listening that is a real opportunity versus just saying, nah, just write me a check? Because it's amazing how many people still do that.
Yeah, so certainly I understand the idea for charity administrators of just, oh, let's just hit the easy button. Let's just do the check. This other stuff. I don't want to have these conversations. Let's just get the cash and move on. So here's the thing: when you can start having these asset giving conversations, it's not just that they get a matching grant from the government essentially to fund their charity because you're getting these double tax benefits. So the gifts don't get 30% larger. The gifts tend to get 10x, 20x larger. Why is that? It has to do with the reference point. It has to do with in psychology, what we actually deal with in behavioral economics. It has to do with reference points. If your gift has a small reference point, the gift will be small. If the gift has a large reference point, the gift will tend to be larger. What do I mean by that? If you ask me for a gift of cash, my natural reference point is other things that I spend cash on, right? What I just spent at Starbucks, other like disposable income gifts. If you ask me for a gift of, say, securities, what's my natural reference point? My portfolio, my securities holdings. That's a massively larger reference point. And, I've worked with fundraisers who, here's an example. So Chiri Nkosi was sharing with me that he had a donor called him up. Hey, I'm going to send you a gift of $5,000 for your latest project. And he said, wonderful. Thank you so much for that. By the way, do you have any shares of stock that you'd want to give instead of the cash? Because you do get a double tax benefit if you give that way. And the donor said, well, I've got those shares of Apple stock, but they've gone up in value, certainly, but this isn't really a good time to sell. Don't really want to change my portfolio. Oh, you don't actually have to change your portfolio at all. You just take that cash, go buy brand new shares of Apple stock. You send us the old shares of Apple stock, and it wipes out all that capital gain. You don't change your portfolio at all. The donor says, I can do that? Oh, yeah, you can do that. It's really a tax smart way to give. So the next day, they got a gift that was 10 times larger. So instead of the 5,000, it was the 50,000, right? So why did it get bigger? He didn't ask for a bigger gift. He asked for a gift of a different kind. But when the high net worth donor goes to her stock portfolio and gets ready to make that transfer, the reasonable size of a gift now changes dramatically. Oh, no, I could do more than that. Yeah, because now we're changing the reference point. It's in a different category. It's in a different mental accounting category. That's what makes it so powerful. Now, absolutely, it's a smarter way to give. Their dollar can go much further because it's becoming more powerful because of the government's matching benefit that sort of expands it. But the idea is that we not only get that, we get this change in psychology. And honestly, I think that's what's driving those long-term results that you mentioned. When we looked at, and again, this was looking at over 1 million nonprofit tax returns over a 6-year period to see what actually drives long-term contributions growth. If the organization started and stayed cash only, on average over the 5 years, they grew their total contributions 11%. If they started uh, receiving, say, gifts of securities along with the cash, and also we're still doing that 5 years later, they weren't on an 11% total contributions growth trajectory. They were on a 66% total
Mm.
contributions growth trajectory. It's a 6 times larger growth trajectory. That was in every nonprofit category, every nonprofit size. Even if we only looked at those that are raising, just $100,000, if we split it, we had the same effect. So whether it was 100,000, a million, 10 million, 50 million, 500 million or above, it happened across the board. What is driving this? Part of that's just the donor psychology. Once we start having wealth sharing conversations, which means we're having asset sharing conversations, it changes the reference point. It changes what kind of giving can become possible.
Yes. Jerry had a good question that he said many of our bigger donors give through their existing donor advised funds, which you mentioned earlier, and,
Mhm.
and that's a whole big conversation we don't have a lot of time to dive into, but he said they're already donating stock there, but it's not direct to us. So in these
Right.
cases, does it make sense to even mention the gift of appreciated assets because they've already donated those to their DAF? How do we talk to those folks about bigger gifts?
Yeah, you talk to them in exactly the same way. You still want to have asset conversations. You still want to share asset donor stories. The only difference is that they're smart enough to know that this is really easy. That easy for you and easy for them because they're going to run that through a DAF at a certain point. Now, by the way, there are DAFs that exist for every kind of valuable asset. So this is something where if your CFO doesn't want to deal with it, or if your donor doesn't know, like, okay, there are DAFs for that, right? That are just for that. Notice I did say valuable asset. Don't talk to me about your timeshares here. You understand what I'm saying, right? So the idea, though, is that we have exactly the same conversations. That it's great that they're doing it, but we continue to want to normalize
Yeah.
this asset giving. And it's great that they are sophisticated enough to know that the most convenient way is oftentimes to use a donor advised fund, but we still want to have those same exact conversations. Gifts of real estate. There are real estate DAFs, gifts of stocks. There, essentially almost all DAFs will be happy to take gifts of stocks. But whatever it is, crypto, whatever the thing is, that doesn't change the conversation at all. We do want to have those asset giving conversations with them.
And I think what a lot of people forget is that donor advised funds have fees. And so we often will then join and just say, hey, there's also opportunity where you can talk to donors about, did you know you can go ahead and give those securities direct to us, direct to the nonprofit and go ahead and
Mhm.
get those same tax benefits that they do to their donor advised fund. So sometimes instead of going through a DAF, they can just
Yep.
go direct to you as a nonprofit and ultimately save on some fees that they would normally be paying to have those funds managed. Do you have any data or stats on any of that?
Well, so we actually don't, because
Okay.
that's one of the things that when it goes through a DAF, we sort of lose the understanding of whether or not that was an asset gift, because it comes out and it shows up to the organization as a cash gift. And they might think, oh, this is just a cash gift, and not realize, like, no, this was actually a securities gift. You just didn't see the whole transaction on
Right.
that. But yeah, another good reason to continue to have these conversations, but also keep in mind that what we're trying to communicate, the underlying message is this: people like me make gifts like this. That's what we want the donor to think. How do we get the donor to think that? Share stories of what other people have done, and they don't even necessarily have to be donor stories of donors to your organization. If you don't have any great asset giving stories for your organization, just talk about a donor in general and gave this way instead of that way, had a big impact, but got a double tax benefit. We want to normalize wealth sharing, and the way we normalize not just disposable income sharing, but wealth sharing is to normalize asset gifts. So we want to talk about it, make it an option, make it an opportunity to ask for more information, whatever it is, to just constantly bring it up so that it normalizes the behavior.
Absolutely. And I know we've talked, you've given us some good frameworks on things that we should do and how we talk about these asks for these major donors. Let's ask the inverse. What are questions that nonprofits should avoid? Like, what are questions that maybe shut down generosity or make donors retreat? Is there a not to do list?
Yeah, well, and I think the things that can shut it down. One, I love starting with the blue sky questions. Okay,
Mm.
if money was no object, right? Like if you had, all the money in the world, tell us the kind of impact that you would like to make, right? What would be most meaningful to you? So we want to start with story. We want to start with defining their meaningful philanthropic objective before we get to the small and narrow. Can you write us a check for that tomorrow? Right. So you start with that. The other thing is that, again, we want to start with story, sharing donor stories of what others have been doing. The tax law stuff, we can get to those things a bit later. But the idea is they first have to want to accomplish something philanthropically, and hopefully using your organization as an instrument. Your organization is not the hero. It's kind of like the hammer of Thor, where the hammer is very impressive, but it is not the hero of the story. It is the hero's effective instrument of impact. So we can open up those conversations that way. So here's kind of a weird thing that you might not think there's anything wrong with it. Uh, when we open up an asset conversation with the donor, and what do I mean by that? I mean, we want to elicit the past, present, and future story of their asset. Assets have stories. Donors like to share those stories. Managing wealth is a big part of their life.
Mhm.
And so, whether we get into that conversation with just, how's business? How's the market been treating you? I hear you invest in real estate. How did you get started? Right? We're always trying to elicit that past, present, future story. We talk about the past, we talk about the present, and we do that so that we can get to the fundraising punchline, which is the future. What are your future plans for the asset? Spoiler alert, there's only two. They're either going to sell it or they're going to die with it. And both of those are great charitable planning opportunities. But when we're having these conversations, one of the things that we want to do is we want to understand what is the goal of that initial conversation. The goal is to get agreement to have the next meeting at which we can present some valuable options, some interesting options for them to consider in their philanthropic planning. Why is it so important to have that as a goal? Number one, it de-stresses the conversation for the fundraiser. Because if you get some hyper technical question, which is why you're not having these conversations now because you're frightened that you're going to get some hyper technical question, that is wonderful news because it's just another motivation as to why we want to have that follow-up meeting. Oh, that's a great question. I want to spend some time and talk with some of our experts at Infinite Giving and other places to put together the best plan for you. But I know that other donors in your situation have been able to work around these issues, and I'm pretty certain there's some good options for you here. So it's another reason to get to the goal, which is to get agreement to have that next meeting at which you present the valuable options. Because once you get agreement on that, you can be really blunt. Okay, so tell me about that asset. When did you buy it, and how much you think it's worth, and how much did you? Any other challenges with it? All of that.
Mhm.
The wrong thing to do feels like the right thing to do, which is if you know just instantly, oh, this donor should be using a charitable remainder trust that pays off in a net income makeup format to a private foundation. Do not just quickly give that right answer. Because if you don't get that next meeting, they're not going to kind of respect that as a valuable option. It's just an offhanded concept. But if you get that next meeting, they're going to spend a couple of weeks. What are they going to be thinking about? That asset, their philanthropic goals, that asset, what they want to accomplish. That puts them in that wealth sharing mindset. And then when you finally present this as the really powerful instrument of impact where you can accomplish all of your goals and do these things, then it has that buildup of kind of that epic scene of delivering that instrument of impact to the prospective hero. And so you actually don't want to just be quick with the right answer. You want to get the next meeting at which you can present those valuable options. So honestly, it's an agreement to present a proposal to the donor. And here's the thing. If you present that proposal and you don't get a gift out of it, it's still super powerful. Why? Because the donor has learned about asset giving. And, if it may be that today is not the time for that, but once they learn that, oh, capital gains are optional, there's okay,
Mhm.
what are they going to think about the next time a big realization event happens? They will have been trained to know all about some of those options.
Yeah. And this kind of leads into one of Rick's questions that he just asked in the Q&A as well, because we're starting to get a little more technical, right? And a lot of us are like, great, we can enter into these conversations. We have a framework. If you are a nonprofit leader, you are passionate about it, and you're able to build relationships. But then as it gets more technical, Rick asked, do most small nonprofits hire an expert who have a lot of experience in these ideas, or do most founders just learn how to do this themselves? I've
Yeah,
got
so
thoughts on that. What do you think?
okay. Yeah, so again, what I would recommend is that if you understand the goal of the conversation is to get the next meeting at which you're going to present some valuable options. Say it's 2 weeks later. Okay. What do you do then? Get on the phone. do some search. Hey, go to encouragegenerosity.com. I've got 65 short videos that go through the whole, world of charitable gift planning. And that stuff's all free. You could do the research yourself, but normally, send some emails, get on the phone. You've got friends that have this knowledge. Maybe you work with organizations that have this knowledge. Hey, I've got this donor that has this weird asset. Do you have any suggestions on, here's a scenario, here's what they're wanting to do, and take the time to build those things. So the idea is to understand that the expertise that you're bringing is expertise on your organization. You know what it can accomplish, what it can't accomplish. You learn what the donor's philanthropic objectives are. And now, because you've de-stressed that asset conversation, so you're not having to pass some CPA tax exam on the fly, you're just trying to, get the agreement to have that next meeting. Then you've got time. You've got time to learn. You've got time to have phone calls. And if that does involve hiring a consultant, that's great. And if you do this for a few years, you start picking up on the strategies that work. So that's what I would recommend.
Yeah.
Karen, what are your thoughts on that?
Yeah, we always tell nonprofit leaders you're not expected to be good at everything, right? And having those strategic partners who can come alongside you in a fiduciary capacity to say, yes, let's give you the infrastructure that you need. Can you receive securities? Do you have a brokerage account? Is it on your website? A lot of people even keep it where it's not even on the site. And then a donor, they're like, I'm going to wait for a donor to ask me about it. And we're like, but meanwhile, those donors are looking at these different causes and they're not even seeing these available. And so we love to come alongside and build that strategy. And occasionally, our nonprofits will bring us into conversations with donors. Sometimes we just equip our nonprofit leaders and clients to, say, great, what are these questions? Let us prepare you to answer this. And then they will handle those as well. But there's a lot of people out there that have that expertise that you can rely on and call in when you're ready.
Yeah, you don't need to know stuff. You just need to know Karen. That really solves all of your problems. No, but it is true to and communicate that to the donor. Like, hey, I'm going to talk with. We've got a team of experts that works on this stuff. We'll build out some plans for you, some options, and making sure that you have all of those things to consider. And let's get together and take a look at what your options are, right?
Yeah,
And again, once you have that understanding of the point of that conversation, it's not to be quick with the right answer. Even if you know the
yeah.
right answer, it's to get that next meeting.
Yeah. We've seen that simply having that more ways to give option on your website that talks about stocks or crypto or donor advised funds right on the nonprofit's website truly does unlock larger gifts. Why do you think these small visibility shifts create such a big behavioral response?
So it does it in a couple of different ways. One, it's just presenting the idea of wealth sharing, right? That understand when we're only talking cash, we're only asking cash, we're only sharing donor stories about cash, that we're only telling disposable income sharing stories. It's the nature of what cash is. And just throwing that into the conversation, we're normalizing it, that this is a normal thing. Oh, it's right here on the website. There's a bunch of different ways that, well, why would I want to do that? Oh, clicking through that because sometimes donors just don't think about it, right? Most people will go through their entire lives and they will only think of their charitable giving as a disposable income decision. And whatever we can do to just throw that out as a normal thing that people like them consider, which is gifts of assets along with this cash giving. So it's a great example of how we're not looking for the magic bullet. We're looking for the constant communication. Some people call it drip marketing, right? It's this idea that we want to have it in 100 different ways and 100 different flavors. Because if you're just going from zero to something, then you're going to get that big impact. And so many organizations, they're just at zero at this point. So even just bringing it up as, all of these other options that are available, other ways to give, how to give smarter, the people become interested in that. And we start shifting that conversation to wealth sharing or asset sharing.
Yes. I know we're about at time. I want to end with one more question. Why is this season right now the most effective time to talk about stock and other major gifts? Like, what's unique about donor psychology during giving season that nonprofits can leverage?
Yeah, so number one is end of the year. That's when you've got to do all of your tax planning. That's when you know how has this year been for you? Has it been a good year? Has it been a down year? A lot of high net worth folks they're not paycheck people, right? They've got a lot of variability in what different years look like. And when they're doing that planning, they're also doing their tax planning. What do we need to move over? What can we accomplish? And for some of them, they'll get to a space where they realize, oh, this was a pretty good year. And when people start to feel a bit wealthier because this was a good year, they get more charitable. And this is the time when they're starting to run those numbers or having their accountants running those numbers where they're starting to realize, oh, this was a pretty good year. I feel a little bit more flexibility in trying to accomplish some of these things. So this is really the time of year when people tend to engage in that overview of the year, and we can start having conversations of the overview of what kind of a big impact do they want to make. Because if we're asking the same questions in like March or April, like, I don't know how this year is going to be, and so I'm hesitant. You start asking the questions in December. Okay, I know how this year is going to be now. So actually, we're having a pretty good year. Or yeah, I'm going to have an income spike. I'm actually at top tax rates. This is a really good time for me to do something charitable because the charitable tax benefits are going to be much larger than if I do it, in January. And that's the other thing that just as a matter of tax planning, now we're getting to the point where if you delay it by a couple of weeks, well, you've delayed your tax benefit by over a year. So it's where the rubber kind of meets the road for these kinds of donors.
Russell, you're amazing. Thank you so much for sharing all this clarity and wisdom today. And thank you to everyone who tuned in for all of your thoughtful questions. If we didn't get to it, just know that we are happy to reach out, or you can reach out to us, and we're happy to get into those conversations. And if you want support streamlining your non-cash gift processes, or you'd like to strengthen your year-end financial strategies, our team at Infinite Giving would love to help. We're going to drop a link in the chat to book a meeting with us, and we'd be glad to talk with you. And of course, before everybody goes away, we want to give away that new book that we have. So Lauren from our team is dropping a winning name in our chat to win Funding Your Mission, the Modern Guide to Nonprofit Finance. So let's see whose name she drops. Let's see, Lauren, you got it. Oh, Hester Linger. So, Hester, thanks for tuning in. Lauren will reach out to you to get your address so we can send you your book, Funding Your Mission. So, congratulations. Thank you again, Russell, for sharing all of this knowledge with us. For everyone listening, you can find all of his research and resources for free on his website at encouragegenerosity.com. We hope everyone has a wonderful giving season. Thanks for joining us.